So stock turnover ratio as well as inventory turnover ratio one and the same. So stock turnover ratio is equal to, your formula is cost of revenue from operations divided by average inventory. Trade receivable turnover ratio is equal to net credit revenue from operations divided by average trade receivable. Cost of revenue from operation is not there. So how to find out cost of revenue from operation? Revenue from operations minus gross profit. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the 5th session of your chapter, that is accounting ratios, and this is the 6th chapter of your 2nd PUC syllabus. So already we have discussed few of the concepts from this chapter. So let us quickly recall what we have discussed in a previous session. So in a previous session, I have covered this topic, that is we have solved problems on solvency ratio. So we have solved certain problems on solvency ratio. So in today's session, we shall continue with the next type of ratio, that is activity or turnover ratio. Now let us see what is this ratio, and it is very important. Whatever the problems I am going to discuss in this particular session, it is very important for 12 marks. Okay, so go through this activity or turnover ratio. So these ratios indicate the speed at which the activities of the business are being performed. So at what speed the activities of the business are performed, so that can be measured in terms of activity or turnover ratio. They express the number of times the assets employed is turned into sales during the accounting period. It helps to know the efficiency level of the business. So why this ratio is being used? In order to know the efficiency level of the business, that is at what speed the activities are being conducted in the business. To measure that, this activity or turnover ratio is calculated. So there are various types of activity or turnover ratio. So these are the types. So first we have inventory turnover ratio. Next is second one, trade receivable turnover ratio. Third one, trade payable turnover ratio. And the fourth one is investment turnover ratio. Fifth one, fixed assets turnover ratio. And the sixth one is working capital turnover ratio. When they ask for 12 marks, so how they'll ask? They'll ask any 3 ratios from this activity or turnover ratio. Now coming to the next one, profitability ratio. Now what is this profitability ratios? These ratios are calculated to analyze the accounting or the earning capacity of the business. The important profitability ratio are. So why this profitability ratio is calculated? To know the earning capacity of the business. So we have various types of profitability ratio. Under that we have gross profit ratio, operating ratio, operating profit ratio, net profit ratio, return on investment, that is ROI, then return on net worth, earnings per share EPS, book value per share, dividend payout ratio, price earnings ratio. Now these 2 ratios are very important. So definitely you will get a 12 marks question. So you will get a 12 marks question where 3 ratios will be asked from the activity ratio, as well as 3 questions or 3 ratios will be asked from profitability ratio. So this is how they will ask the question. So these 3 ratios, it carries how many marks? 12 marks, where 6 ratios will be asked. Each ratio calculation carry 2 marks each. So that overall problem will be for 12 marks. So hope you are clear about it. Now we shall see the question paper problem, how they have asked in your question paper. Now this is a 12 marks problem. So these are the repeated questions what they have asked in your question paper, and we shall solve it today. The following information is related to the company as on 31st/3/2023. So they have given revenue from operations 10 lakh, gross profit 2 lakh, then average inventory 1 lakh, net credit revenue from operations 6 lakh, average trade payable, that is 1,50,000, net credit purchase 5 lakh, average trade payable 2,50,000, operating expenses 1 lakh, and net profit 1 lakh. So these are the information they have given, and let us see what they have asked us to calculate for 12 marks. Yes, calculate inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, gross profit ratio, operating ratio, as well as net profit ratio. So these three ratios are from the activity ratios. Okay, and these three are from the profitability ratio. Okay, so hope you are clear about it. So this is how they'll ask the question. Each ratio calculation carries 2 marks each. Okay, so that overall it will be 12 marks because they have asked us to calculate 6 ratios which carries 2 marks each. So we will get 12 marks. The main thing here is that we have to know the formula to calculate these ratios. So we shall begin with inventory turnover ratio. So, or it is also called as stock turnover ratio. So, stock turnover ratio as well as inventory turnover ratio one and the same. So, stock turnover ratio is equal to, your formula is cost of revenue from operations divided by average inventory. Now, let us see the question whether they have given us directly cost of revenue from operations as well as average inventory. If not, we have to calculate and find out. Now, let us see the question. Cost of revenue from operations they have not given. So, how to find out cost of revenue from operations? Your formula is cost of revenue from operations is equal to revenue from operations minus gross profit. So, we shall find out, but we have average inventory. Average inventory already we know, so we can apply directly 1 lakh. Okay, so we shall find out first cost of revenue from operation. Cost of revenue from operations is equal to revenue from operation minus gross profit. Revenue from operation minus gross profit. Now, how much is revenue from operation? So, revenue from operation is 10 lakh minus gross profit is 2 lakh. So, rupees 10 lakh minus rupees 2 lakh. So, that will be rupees 8 lakh. So, we got cost of revenue from operations. Average inventory, how much they have given? Average inventory is 1 lakh. So, average inventory we have 1 lakh. So, we shall apply the formula stock turnover ratio or inventory turnover ratio. Stock turnover ratio is equal to, so cost of revenue from operations is rupees 8 lakh divided by average inventory is rupees 1 lakh. So, how much will get? Rupees 8 lakh divided by rupees 1 lakh. So, I think it is 8. So, 8 lakh divided by 1 lakh. So, we will get 8 times. So, this has to be measured in terms of times. So, 8 times. So, hope you are clear about stock turnover ratio. Here in this question, we did not get cost of revenue from operations directly. So, how to find out? Cost of revenue from operations is equal to revenue from operation minus gross profit. And average inventory was given in the question, that is 1 lakh. So, we'll get 8 times. Hope you are clear. Now, moving on to the next one, trade receivable turnover ratio is equal to net credit revenue from operations divided by average trade receivable. Now, let us see the question. Net credit revenue from operations 6 lakh we have directly divided by average trade receivable 1,50,000. So, both they have given us directly. So, 6 lakh divided by 1,50,000. So, you can apply directly rupees 6 lakh divided by rupees 1,50,000. So, let us calculate 6 lakh divided by 1,50,000. So, we will get 4 times. So, once again we shall recheck it. So, net credit revenue from operations divided by average trade receivable. So, net credit revenue from operation is 6 lakh divided by 1,50,000. So, that would be 4 times. Hope you are clear about it. Next, trade payable turnover ratio. Your formula is net credit purchase divided by average trade payable. So, let us see whether we have this information. So, net credit purchase 5 lakh divided by average trade payable is 2,50,000. So, both they have given us directly. So, 5 lakh divided by 2,50,000. So how to calculate? Rupees 5 lakh divided by rupees 2,50,000. So this would be 2 times. So 5 lakh divided by 2 lakh, 5 lakh divided by 2,50,000. So it will be 2 times. So your activity ratio is measured in terms of times. So we are done with this. Now moving on to the next 3 ratios will be on profitability ratio. So we have gross profit ratio. So your formula is gross profit divided by net revenue from operations into 100. Now let us see whether we have gross profit. So gross profit. So we have gross profit 2 lakh divided by net revenue from operations. So net revenue from operation is your revenue from operations. So 2 lakh divided by 10 lakh. So gross profit, or whether we have any other informations, no, other operating expenses, net profit. So how we have to apply? Gross profit divided by net revenue from operations into 100. So it will be 2 lakh divided by 10 lakh into 100. So rupees 2 lakh divided by rupees 10 lakh into 100. So 2 lakh divided by 10 lakh into 100. So you'll get, now this is measured in terms of percentage, 20%. So this will be 20%. Now moving on to the next one, operating ratio is equal to cost of revenue from operations plus operating expenses divided by net revenue from operation. Now cost of revenue from operations already we have calculated here. That is, cost of revenue from operation is rupees 8 lakh. 8 lakh. Now let's see what is the operating expenses. Plus operating expenses is 1 lakh. So cost of revenue from operation 8 lakh plus operating expenses is 1 lakh. So we shall calculate. Cost of revenue from operation is rupees 8 lakh. Already we have calculated. Plus operating expenses rupees 1 lakh. Divided by net revenue from operation. Net revenue from operation is 10 lakh. Rupees 10 lakh. That will be your revenue from operation itself. That is rupees 10 lakh into 100. So this will be rupees 8 lakh plus 1 lakh. That will be rupees 9 lakh divided by rupees 10 lakh into 100. 9 lakh divided by 10 lakh into 100. So this will be 90%. So hope you are clear about operating ratio. Moving on to the next one, net profit ratio. Your formula is net profit divided by net revenue from operations into 100. Now let us see what is the net profit they have given. So net profit is 1 lakh divided by net revenue from operation is 10 lakh. So 1 lakh, that is net profit, 1 lakh divided by 10 lakh into 100. That is equal to rupees 1 lakh divided by rupees 10 lakh into 100. So 1 lakh divided by 10 lakh into 100. So this will be 10%. So this is how a simple problem for 12 marks. Just you have to know the formula where everything will be given us directly. Just you have to apply the formula and write. So what are the formulas? So stock turnover ratio. What is the formula? Net revenue from operations. So if you see the formula here, stock turnover ratio is equal to cost of revenue from operations divided by average inventory. Next one is trade receivable turnover ratio, net credit revenue from operations divided by average trade receivable. Next, trade payable turnover ratio, net credit purchase divided by average trade payable. Next, gross profit ratio, gross profit divided by net revenue from operations into 100. Next, operating ratio, cost of revenue from operation plus operating expenses divided by net revenue from operations into 100. Next, last one, net profit ratio is equal to net profit divided by net revenue from operations into 100. So hope you are clear about it. Very easy to score 12 marks. So 6 ratios will be given. Just you have to know the formula and apply the formula. Now moving on to the next similar type of problem. The following information is related to a company as on 31st/3/2022. So they have given revenue from operations 12 lakh. Gross profit 4 lakh, average inventory they have given 2 lakh, net credit revenue from operations 8 lakh, average trade receivable 2 lakh, net credit purchases 5 lakh, average trade payable 2 lakh, operating expenses 1 lakh, net profit 3 lakh. So these are the information they have given. Let us see what they have asked us to calculate. Yes, similar ratios they have asked. Inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, gross profit ratio, operating ratio as well as net profit ratio. So hope you are clear how to calculate. So here also we shall calculate in the same way where these three ratios are measured in terms of times and gross profit or the profitability ratio is measured in terms of percentage. Okay, so we shall solve the problem now. So this is the solution. So first we shall start with stock turnover ratio or inventory turnover ratio. So what is the formula? Cost of revenue from operations divided by average inventory. Now let us see whether they have given us directly. So if you see the problem, cost of revenue from operation is not there. So how to find out cost of revenue from operation? Revenue from operations minus gross profit. Okay, so we shall calculate cost of revenue from operations is equal to revenue from operation minus gross profit. Revenue from operation minus gross profit. Now, how much is revenue from operation? That is equal to revenue from operation is 12 lakh minus gross profit 4 lakh. So, rupees 12 lakh minus rupees 4 lakh. So, that will be rupees 8 lakh. Now, we know average inventory. So, we shall directly find out stock turnover ratio. Stock turnover ratio is equal to cost of revenue from operation is rupees 8 lakh divided by average inventory. So average inventory here is 2 lakh. So 8 lakh divided by 2 lakh. Rupees 2 lakh. So this is measured in terms of times. So 8 lakh divided by 2 lakh. So that will be 4 times. So hope you are clear about stock turnover ratio. Moving on to the next one. Trade receivable turnover ratio. Your formula is net credit revenue from operations divided by average trade receivable. Now whether they have given us directly, yes, net credit revenue from operation is 8 lakh divided by average trade receivable, that is 2 lakh. So net credit revenue from operations divided by average trade receivable, 8 lakh divided by 2 lakh. So let's solve. Rupees 8 lakh divided by rupees 2 lakh. So that will be 8 lakh divided by 2 lakh. So once again it is 4 times. So here also it is 8 lakh. So 12 lakh minus 4 lakh, it was 8 lakh divided by average trade receivable or average inventory. Average inventory as well as average trade receivable is same. So 2 lakh, it is both 4 times. Now moving on to the next one, trade payable turnover ratio. So your formula is net credit purchase divided by average trade payable. So how much is net credit purchase? So net credit purchase is 5 lakh divided by average trade payable, that is 2 lakh. 5 lakh divided by 2 lakh. Net credit purchase rupees 5 lakh divided by rupees 2 lakh. So once again we shall see here. Yes, average inventory is 2 lakh, average trade receivable is also 2 lakh, average trade payable is also 2 lakh. Okay, so all the denominators are same in this problem. So 5 lakh divided by 2 lakh. So this will be 2.5 times. So hope you are clear. Now moving on to the next one, gross profit ratio. So your formula is gross profit divided by net revenue from operations into 100. So how much is gross profit in the problem? So gross profit is 4 lakh divided by net revenue from operations is 12 lakh. So revenue from operation itself is net revenue from operation. So 4 lakh divided by 12 lakh into 100. So 4 lakh divided by 12 lakh into 100. So 4 lakh divided by 12 lakh into 100. So it will be 33.33%. So once again we shall check 4 lakh divided by 12 lakh into 100. So 33.33%. Now moving on to the next one, operating ratio is equal to cost of revenue from operation plus operating expenses divided by net revenue from operations into 100. So cost of revenue from operations already we have calculated. So cost of revenue from operation is rupees 8 lakh plus operating expenses. Operating expenses is 1 lakh. 8 lakh plus 1 lakh. So rupees 8 lakh plus rupees 1 lakh divided by net revenue from operations already we have applied, that is rupees 12 lakh. Rupees 12 lakh into 100. So 8 lakh plus 1 lakh, that is rupees 9 lakh divided by rupees 12 lakh, that is net revenue from operations into 100. So 9 lakh divided by 12 lakh into 100. So that will be 75%. So this is about your operating ratio. Next, moving on to the next one, net profit ratio. Your formula is net profit divided by net revenue from operations into 100. So let us see what is the net profit. So net profit is 3 lakh divided by 12 lakh. That is revenue from operation itself is net revenue from operation. So 3 lakh divided by 12 lakh into 100. That is equal to rupees 3 lakh divided by rupees 12 lakh into 100. So 3 lakh divided by 12 lakh into 100. So you will get that is equal to 25%. So hope you are clear about it. So this is how you can easily score 12 marks where only 6 ratios will be given and you have to know the formula and apply the formula. So in my next session, I am going to discuss few more problems on activity or turnover ratio as well as problems on profitability ratio. So we shall discuss the question paper problem itself. What are the types of questions they have asked? So as like today's session, whatever the questions they have asked in your previous question paper, same way we shall see what are the other problems, other type of problems where they have asked from this activity as well as profitability ratio. So my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.